Hello, and welcome to the January 2021 Economic and Market Update from Commonwealth Financial Network. Happy New Year! My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. December was another great month for financial markets, with gains in everything, closing off an equally strong quarter, also with gains in everything. For the year, the news was also good, with markets more than recovering after the March and April drops to show high single and double-digit gains across the board. The riskiest assets did the best, led by the NASDAQ here in the U.S. and by emerging markets, but more established countries and companies also did well. And this was, of course, despite the pandemic, which shaped the entire year. Despite the terrible medical toll, a combination of lowered interest rates by the Federal Reserve and fiscal stimulus by the central government brought the economy back from the brink of depression and financial markets to all-time highs. Clearly, markets expect continued improvement, and whether we get it is the key question for 2021. On the medical front, the last quarter of 2020 was a bad one, as the third wave of the pandemic worsened steadily. While there are signs it may be topping, the risks remain severe as we ended the year. Offsetting that, though, was the approval of 2 vaccines and the start of public vaccinations at year-end. While it will take time, signs are the medical risks may have peaked in December and be set for a slow decline. On the economic front, we also saw rising damage in the last quarter of 2020, and especially in December. Job growth dropped while layoffs rose, ending the year with a real possibility of a December decline in jobs. Consumer confidence and spending also dropped as the medical risks drove governmental shutdowns around the country. Offsetting that, though, business confidence and spending remained solid, and the passage of another federal stimulus bill in December should help revive consumer demand, as it did earlier in the year. Just as with the medical risks, signs are the economic risks may also have peaked. While the risks are real, then, they are also mostly backward-looking. Markets look forward, which explains the continued rally and is a positive sign for 2021. The third wave shows signs of peaking, which would be positive, and even if we do get another round of infections from holiday travel, we should also start to see vaccines start to be deployed more quickly this month. And that'll reduce both the real and the perceived medical risks. Over the next couple of months, the medical news is likely to look a lot better, and the economic news should follow suit. The economy has been very resilient despite the third wave and will likely rebound as the fiscal stimulus checks hit bank accounts. Most analysts see the pandemic coming under control in 2021 and then an economic recovery, and that's what the markets are anticipating. While we'll likely see more volatility in the stock market, especially in the short term, over time, the signs are good. So entering 2021, both the medical and the economic risks are still very real after increasing through the end of last year. That said, though, we can reasonably believe things will get better over the next couple of months. While the third wave is still with us, we may be through the worst of it. While vaccinations are going slowly, they are going, and distribution will improve over the next couple of months. On the economic front, the stimulus checks will remove much of the immediate risk and allow growth to keep going while vaccinations proceed. This should get us back to something like normal within the next several months. And that's what markets are seeing as they rally. While last year ended on rising risks, this year looks like it'll be much better, but we still have a couple of months to go. That's it for this update. Thanks for watching. Join me in February for the next monthly update, but until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We're getting through this together.